Uchitec wants a darling stock in Malaysia because of the two things. High profit margins, highest in the country, I believe, or at least listed companies. And number two, the dividend yield, right? It was a solid. In fact, I have a friend, a former colleague who invested in Uchitec and actually managed to use that money that grew as his wedding expenses.
Wow.
So there's anyways, I thought I did it in there. But you know, it's down 20%.
Yeah, and it's not only the first time that it's down 20%.
Too busy to find stock ideas? Check out Fiverr Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Actually, there's a few times. Number one is the COVID. Number two is actually during the 2018 trade war. So yeah, 2 times also from 2018, and also another round is in 2019. So this is not the first time that they are actually down 20%. Okay, so just to share a little bit, previously they don't really pay a lot of tax rate. You can see that their average tax rate for the past 15 years is around like 2 to 4%, very, very low. But in 2023 and 2024, their tax rate is now 19 to 9.
Sounds like it's over.
Yeah, correct. So basically their pioneer status got shrink a lot. So you can see that last time they got a lot of stuff exempted. You can see like the ones that is highlighted over here, some of the subsidiaries and some of the business that are allowed for them to actually get 100% income tax exempted. But right now it's only just like one line only, which is this CPDS TOF module. And to give you a sense on how much is actually got exempted, it's actually just 16.67% of their revenue, whereby they can actually declare this as a pioneer status. So yeah, a very, very small amount. Last time it used to be around probably 85% or even more than that. That's why you can see that's a low tax rate. So right now they have to pay more tax expenses. Okay, yeah, so a few things. Obviously you can see the obvious one, which is their sales start to drop. Right now, it's similar level to 20, almost slightly higher bit, but than 2022. Profits also drop a little bit because of their obviously pioneer status, and also their revenue is dropping. Same for free cash flow. And why is it? It's because if you look at their geographical coverage, Europe, Asia, and also USA, they are all dropping. Obviously,
so it's not just the tax, right? It's just market demand as well.
Yes, correct. The huge one will be market demand than the tax one. Yeah.
Because the sales number, 5%, 10% drop is going to be a much bigger impact than the removal of the pioneer
Exactly.
status.
I mean, just like as you highlighted, they have the highest margin, right? So yeah, that's why sales is very important for them. And right now, Europe is not doing well, obviously because they are facing some sort of like a tariff war with the US. US also right now is not doing well. Same for Asia Pacific, which is majority from China. And also just to share a little bit on their balance sheet, there's a few times whereby their net cash actually dropped a lot. So number one is in 2018, but this one, they did some sort of capital repayment. They have to abide to the new MFRS, if I'm not mistaken, some sort of the accounting regulation. And then they pay out this capital as dividends to shareholders, so at least shareholders get some reward. The second time is in 2023. So this is where their pioneer status got removed. So, but even though they removed that, they paid more dividends as compared to 2022. So they actually use up some of their existing cash balance to pay out to shareholders. So yeah, you can see the numbers over here. You can see there's a big jump from 2022 to 2023, the dividend payout. But then now it shrink a little bit, obviously because their sales and profits are not doing so well. And if you look at some of the ratios, right, payout ratios right now more than 100%. If you look at in terms of net profit and also for free cash flow, as well as if you see for net cash, if you're comparing in the 2023's number. And right now, I mean, if you go back to their normalized, it's going to be around like 80% cash payout ratio. So assuming if they go back to 80%, definitely this dividend amount will not be sustained. Probably you go back to around this range or around here. So that's why there is some sort of like a correction, 20% drop, because sales is not doing so well, and then potentially dividends will be cut a lot. Yeah, we actually talked about Uchitec quite some time already, and also we also did highlighted some of these latest news about EU's focus. So right now the Europe, what they want to do is that a lot of their tech guys are actually falling behind, so to speak also. So they are trying to gain back some attention from outsiders or to attract more FDI. So they did this EU Chip Act, whereby they're going to be giving out about 46 billion in terms of funding to boost their production capacity to 20% by 2030. So this is their semiconductor side of things. The reason why they're spending a lot is because they realize that they are no longer friend with the US already.
Yep.
Yeah, the US also is like trying to like do a lot of stuff. So they are trying to do a lot of things inside their country. They want to be self-sustaining also. So that's why you see they spend a lot of their own defenses and also semiconductor. Semiconductor is the one that they are spending a lot more. And if you look at some of the comments by Intel's former CEO, right, Pat Gelsinger, basically he said that the share of production in the US is actually more important than the global growth. So what he means is basically everything needs to be in-house inside your country for your industry to be safe. This is the same for TSMC. Basically, they say that the first priority is Taiwan, second priority is Taiwan, third priority is Taiwan. So yeah, this one, which is why EU right now, they are changing their focus. Instead of going towards global, they are trying to be more in-house. So a few key thoughts. Obviously, the dividend payout is going to be much lesser. It's going to go back to 2022's level. So where is 2022 level? It's over here. So you can see that there's still much more room for correction. I mean, they're paying about 120 million. It's going to go back to 88 million. So that's about how much? Like a probably 30% cut. So yeah, it's a huge...
Yeah, so 30% cut at 20%
share price
share down. Maybe a bit more to go. We'll see.
Yep.
6% dividend yield sounds about right. I think they reached like some ridiculous amount.
12% in 2023.
Yeah,
it was quite. And then people thought that maybe they can maintain, but because of this tariff war, need to go back down again.
Yeah.
So the third one, this setback by the EU probably is going to be temporary. That's what we like to think. I mean, tariff war, we don't think this one will be for long. Obviously, it's going to revert back, and then we are going back to globalization. That's what we are hoping for. If it's continue going to be tariff war, I don't think it's going to be good for the overall economy. And last but not least, is actually there's something good about Uchitec's major customer. It is this comment from Reddit. So you can see, right? Actually, I didn't know about anything about coffee machine. But basically what they found out about this, what is so good about Ura, it's not actually about their monopoly on good coffee, but they have this machine or this feature that they can actually customize their electronic grind size control. So everything's inside this machine, right? Or you just need to click like one button, then it will change according to the
how smooth you want it
to be. Yeah. Yep. So
that's why they come in. Yes.
Yeah. So they are the one that can do that as compared to other Chinese coffee machine maker like Gaggia, De Longhi or Philips, right? So yeah, basically they can do everything like very, very fast. That's why their prices for their machines is also very, very expensive.
And for those who don't know, some of the control systems inside this Ura machine is made by Uchitec.
Yep. So that's why their Uchitec's margin also is so high. So yeah, that is the good thing about Uchitec. And we don't only share about the Euro. We talk a lot about other news as well inside our Fire Pro. So if you want to know what will be the latest insights or information or the market update or trends going forward, we share everything inside this news update. And so far we shared about 1,200 information, and it's going to be more in the future. And not only that, we also have this portfolio, and so far our portfolio actually is doing pretty well. I mean, it's only down like 2% as compared to the previous month. But what surprisingly was that the borrowing portfolio actually went up because more companies are actually paying out dividends. So yeah, and
yep. So the dividend yield is about a little bit higher, the average dividend yield of EPFs. But if you want to get access to all of these insights, this reference portfolio, do consider hopping on to the Pro community. Link is all in the comments and description, as well as the free sample. So if you want to get a taste of what's inside the community, check it out. And guys, thanks for staying all the way until the end, and I'll see you into the next video.